Hi friends, Kurt Triebold here from One Tree Hill, and this is your latest market update. Since the election, there have been a few positive trends to pay attention to. Just after the midterms, a CPI report was published by the Labor Bureau that indicates inflation went down faster than expected in October, dropping to a year-over-year rate of 7.7%, down from its June peak of 9.1%. This is great news, but is still nowhere near the Fed's target inflation rate of 2%. In addition, a recent U.S. Federal Reserve policy meeting showed that most Fed officials were inclined to slow the pace of interest rate increases. In fact, a substantial majority believe that a slowdown would likely soon be appropriate. The big question is, what will the next inflation report look like on December 13th? Is inflation continuing to go lower? Will it be lower than 7% on an annualized basis? If inflation continues to go lower, then the Fed will be able to reduce the magnitude of near-term rate hikes, and then at some point soon, stop raising rates altogether. Currently, the last rate hike is projected to be in June of next year. Some market models suggest the Fed will in fact be cutting interest rates the second half of next year. Of course, this would be great for stocks. However, there are many experts that don't believe this is very realistic and suggest caution in interpreting these models. If that's the case, then it'll be up to companies to begin expanding earnings and not just rely on lower interest rates to push stocks higher, a tall order in the face of a pending recession. In the end, I'm still optimistic that the market will end a year from now higher than it is today, but the path to those higher levels is murky at best and is likely to be very volatile in fact. Let's first see what the next CPI report indicates next week. That's it for this week's market update. Stay well, everyone.